So, hello and a very warm welcome to all the SME Street podcast listeners and viewers on YouTube and on SME Street. It's been quite some time that we are not that active on our through our podcast and interactions, video interactions. So, to end that particular gap, today I am excited and happy to share that we have Mr. Deepak Maheshwari with us, who is the basically the financial expert and a kind of mentor who can guide and sail the MSME success story single-handedly as well. And he has been helping MSMEs, entrepreneurs who are actually trying to leapfrog, who are trying to create their success story in their respective domains. So meet Mr. Deepak Maheshwari, who is the co-founder of Jindigi Life Consulting and Deal Flexes. And we are going to discuss today in this podcast about how and why Indian MSMEs at this point of time should explore and should target multiple or at least 10x growth. So, Mr. Maheshwari, thank you so much for joining in, and let's hear from you. If you have a very strong focus and a perspective towards India's growth story, and please give us a bit of insightful, driven roadmap for entrepreneur of today, why he should actually target 10x and how he should, target a 10x business growth.
Thanks, Faiz. First of all, for having me on the show. And as you know, I always love to talk about the MSMEs and startups as a sector and the role and importance of what they bring to the table in terms of what the overall vision for the country is. It's a significant part of our economic architecture, impacts tons of MSME promoters and the allied ecosystem that gets impacted because of people that work in the MSME sector. It's a significant contributor to the overall GDP. We recently, as you know, we officially the country announced the 4 trillion mark, that we crossed the 4 trillion mark. 5 trillion is not far away, and 10 trillion is something that we are all aspiring for over the next decade in terms of really moving that number as fast as we can. As a country, there are tons of steps that are being taken. The foundation has been laid, and now it's up to us from an entrepreneur's standpoint, uh, what we can do in our own ways in terms of really shaping the future of the country. And in that respect, obviously, all MSME promoters will get an opportunity to really think big scale and really leverage and then grow significantly from where they are. It'll all be about how our own mindsets really work at this point in time. And I've always mentioned, if you look at the uh, numbers when we talk of 4 and 10 and everything, I think sometimes we lose the importance of or the size of the opportunity in front of us. And I've always made that comment over the last past few years. Uh, when I started my career, when I got out of college, we were just a 300 million economy, right? A 300 billion economy. Now, from there to come to a 4 trillion over the last 1993 to 2023, which is 30 odd years, uh, it's a gigantic number. So we've added like 3.6, we've added 9 times of the size of the economy when I started to really come to the workforce, right? And now what we see as the size of India, we're talking of two Indias getting added to one India. So that's a significant size, and then we are talking of just 10 odd years, right? Give a year here or there. But that's the size of the opportunity. Now, if that's the size of the opportunity, and as MSMEs, we are a significant part of that overall economic architecture, the opportunity landscape is huge. But yes, the important thing is we can all talk numbers, we can talk 10x growth, we can talk everything. But I think the important thing is this 10x growth is not going to come from similarly done situations. So what you
mm,
have done in the past as a promoter is not going to take you to this 10x growth. So people with a clear vision and strategy, with people who are understanding and leveraging technology and focusing on innovative architectures. So the ecosystem is obviously enabling all that. Now,
mm,
how smart one is in terms of leveraging that entire architecture to one's advantage, depending on what your personal core competency is, something that you've done, ancillary opportunities that are coming up in your sector, or even in new sectors as you want to expand beyond your core business that you are doing. If there are newer areas that you want to explore, there are tons of
mm,
opportunities coming our way. But one has to look at the entire ecosystem, see one's SME from an expertise standpoint where you are,
mm,
leverage the ecosystem both from product innovation, leveraging technology, and the most important factor, credit, right? So credit in its all form and shape was very structured in a one particular form and fashion. Uh,
mm,
but today there are tons and tons of opportunities in terms of how one can think about businesses getting financed, right? Whether you talk of a lot of fintechs which have solved for specific needs on supply chain side for specifically. There are
mm,
unsecured lines that are available based on cash flows. So
mm,
people, newer systems which have come into place where hitherto you were bogged down by just security in a
mm,
banking architecture. That nimbleness is coming in. People are willing to take risk based on cash flows, ring fence the risk. So all that is happening. And one has to
mm,
be really smart in terms of putting it together, in terms of one's own company, how you can leverage some of these and enable that capital to really fuel the growth that we're talking of. So
mm.
that's a good start point to really move the
So,
conversation forward.
the good part is the overall scenario looks lucrative. What MSME and what an entrepreneur is expected to do right now, I mean, now is to actually keep an eye and ear open because a lot of innovation has happened in the way he's been doing business. So it is like the business processes have actually transformed, and at the same time, scenarios, ecosystems are also evolving. So be it lending or be it customer engagements, be it new customer acquisitions. So things are changing. That's what you are suggesting that entrepreneur needs to keep an agile approach towards its surroundings.
Oh, absolutely. And I think that innovation is all encompassing.
Hmm,
And digital channels, non-digital channels, even in non-digital channels, there is enough architecture that can be used. So we work with quite a few startups who have started to also uh, leverage what and how one would want to look at offline distribution. So they are creating structures where distribution is already set. So you can
hmm,
bring in your new product as long as you understand the product. You can market into new territories by just plugging into these ecosystems. Because you don't need to. So it's not about just digital. Digital, obviously, you have got marketplaces, you've got your own websites, you've got multiple mediums in which to go to your end customer. But
hmm,
even in terms of doing retail distribution in the older fashion, there are companies which are plugging in, they've created distribution architecture. So it's like distribution as a service, if I may call it, right?
hmm,
Where if you have a great product and you've got manufacturing capability, your ability to distribute to remotest parts of the country is absolutely possible. So some of those things on the offline world also helps. So the way we've done offline is not necessarily the way we are doing offline today. So there are
hmm.
smarter, innovative architectures that have been put in place by startups, which one should be able to leverage for their own set of products. I think one angle that I've always talked about, Faiz, is understanding customers' needs and preferences. If you look at a basic architecture in which how we've operated, a lot of us have operated that way. It is all transactional. I'm happy doing sales today. I don't know whether that same customer is going to come back to me tomorrow. Uh, I'm interested in today's sales and today's profit. So in that scenario, what happens is a lot of times product quality from a mindshare standpoint takes a backseat. You're more interested in just getting the sales out. But a lot of times people forget that just doing the same business with multiple sets of customers requires a lot of money to be spent on customer acquisition, right? But if you have retained a customer and that customer is making repeat purchases at your place, that is how one would benefit in a longer term format by spending less on customer acquisition but retaining that customer, right? A typical example that I always get asked, and I use that example. A lot of times people ask, why is valuation of Zomato, for an example, the way it is, right? It's a loss-making business, this, that. You hear a lot of times. And there are enough MSMEs who are making profit. Why don't we get valued like that, for an example, right? There are hotels, there are restaurants from where Zomato picks up and does transactions, and Zomato's valuations are very different for the same thing. So I tell them a simple example here. So you pick up any hotel, say as you want to eat, you are a regular samosa eater, right? But if you've gone to your nearest samosa favorite shop even 10 times a year, he doesn't care that you've come 10 times or you've come 5 times. He's not bothered. He's worried about that sales for that same day. Now, when it comes to data as a power, what and if you're ordering through Zomato knows that if you're a regular guy, then they'll come with you with multiple options. If you haven't come back in a month's time, they know your propensity to consume certain things, ability to offer offers from those kind of restaurants. So that data analytics layer on top of a customer's transaction is the biggest driver. That is why terminal values get valued. So I think some of us have to really understand, some of the founders have to really understand the beauty of um, understanding transaction layers, understanding customer behavior, and then monetizing that through retention mechanisms. So as long as we have a great product, but then you have to build all this on top for really to command real value for the businesses that one is building. So I think that's very important from a structure standpoint. The other thing that I've also continued to notice, and obviously a lot of people are making those changes, is most situations we would find our investment in strategic leadership levels being short of what is desired. A lot of times, the ability to really leave not I should say the ability to delegate is lot many times leaves the situation to be from a desired state standpoint. It is so centric at the founder level. uh, Tons of mundane tasks that you would ideally want somebody else to do. Value for one's time is something that one has to realize. Your best bet is to really spend your valuable time on things where your dollar per hour rate is technically much higher, right? You spend time, you spend 1 hour where the real impact on the business will be there. For other things, you have to delegate and get leadership teams in place, get middle management in place. So I think some of those things are very, very important. You can't control everything and then want to grow 10x. 10x growth means you have to invest in people, invest in culture. So that part of it is very, very important. And a lot of people are making those changes because ultimately, if you create a great team, then your ability to delegate and work through the architecture, that the vision that you are creating, you're creating an executable plan with people around you. You can't execute everything. The other thing that I always talk about is really collaborative architectures. Everything need not be done by you today, right? It doesn't need to happen in your company. You don't need to boil the ocean by creating everything inside. You want a software. Why would you want to create, right? There are tons of things that are available. There are tons of people who specialize in particular areas. One has to be able to collaborate. Collaboration is the right word. And it's more like an API thinking. You should be able to plug in the right stuff, and then you should be in business tomorrow morning. Pay software as a service kind of pricing. So neither are you spending money on a capex, neither you are spending heavily on opex, but you are spending on the right tools which help you get into market faster. So ability to collaborate and not trying to do everything on your own is a also a mindset. So I think that is something that we need to look at consciously in terms of software tools and technologies or specific areas where one can collaborate with other partners. But then that helps you go to market very fast. And that speed is very important today. And how do you attain that speed without losing your core? So you can't obviously outsource your core. You focus on your core strength, core product, build a team around it, but then things that you can collaborate with people on, that collaboration has to be very, very important. So that's again a mindset issue, lot many times. But I think that the faster we address that elephant, the better we will be. So I think that's very, very important.
So,
Um,
being a financial guide for most of the startups that you're working with, and by the way, for our readers' interest, Mr. Maheshwari is also running a angel funding investment firm, angel investment firm, and he's been working and with multiple startups from multiple areas or multiple verticals. So, from the financial management perspective, what is your piece of advice? What are the key mantras that entrepreneurs should uh, keep as top priority in today's time, especially when we are actually when we have envisioned a bigger, economic growth for the country as well as MSME's participation in that.
Thanks, Wes, for asking that. I think this is, see, ultimately, whatever you do, whatever business model, ultimately it has to boil down to finance. Because if you don't understand your P&L well, then it's a big problem. And I think as we meet founders, as we look at specific situations, I can tell you tons of founders who are so far away from really looking at their numbers appropriately, the way one should look at, right? Looking at unit economics, understanding margins, understanding pricing, understanding their working capital requirement, understanding payment cycles, and how all that really impacts their cash flows is very important. And a lot of times I see gaps in terms of understanding some basic stuff as well. So a good founder, a good MSME promoter, always you will find that understanding of his P&L is very, very brilliant. So if you understand the dynamics of the business model that you're creating, the pricing model that you're creating, the terms that you're giving to your creators, the terms that you're giving to receiving from your sales situations, all those are very important and all levers have to be understood, because ultimately if you understand the levers, then ability to price will be correct, ability to understand cost structures, ability to understand gross margins, all that will come in. Because once you understand that, then your ability to deploy that in your own business, deploy it at your vendor levels is going to be very, very key. And that becomes a very important driver in terms of how one would want to look at business. Because every business at an MSME level is finally, if you look at it, is all about profitability. But not every business is going to be, losses are not going to be funded by VC funds, because that's only one part and one very specific part of areas which could get funded under that bucket. But what's important is to look at financial margins, look at your, ultimately, you have to think profit after tax. Now, if you look at capital markets, for an example, now in capital markets, nobody's going to look at your loss number, nobody's looking at your cash loss numbers after a point. So even if you discount the how these new age companies have got listed, and there is a method to that madness as well. But I would stick to how, and when we look at a 10x kind of a situation and looking at financials, the regular capital market guys, 98% of them will only go have the opportunity to really leverage the capital markets once you look at external equity beyond family, friends, once you've gone to a certain scale. Now, over there, what capital markets are going to look at is profit after tax, and multiples of profit after tax is what you will end up getting as your valuation. So the smarter that you are, understanding of financial numbers, where can you get growth, where can you get different channels to work, channel margins are very, very different. So it's not only about sales, putting together sales, but different channels work for you differently, different streams will give you different kind of profitability. So have understanding financial numbers and key metrics that make it work at level 3 is very important, because ultimately, as I said, the business valuation will be driven by profit after tax and not revenue in isolation. And if you're growing margins better, if you are growing your, obviously sales has to grow. And along with that, if your margins are improving and you're able to deliver value for your shareholders at a standalone level, then the ability to attract capital in the capital markets, SME IPOs have become a rage, very important capital raising tool now from an MSME standpoint. The activity is only going to grow significantly. There is a lot of work happening at a BSc and NSE level, and a lot of people over the last 24 months have been able to raise capital. Hitherto, which was missing from a segment standpoint, and the foundation that has now been laid is only going to help. So people who can aspire to not only just deliver lifestyle kind of businesses, but businesses that can really use some of the opportunities that we talked of in terms of understanding customer mindset, technology, building their teams out, being adaptable and flexible, will and understanding of their P&Ls to at level 3 will be able to absolutely go down that route of SME IPOs and then larger transition to the broader market is how one would look at it. So there are significant opportunities in terms of how one can look at leveraging the overall India landscape at this point in time, be part of this adding two Indias to one India story over the next 10 years, ability to really grow 10x, if not more. Be flexible and keep your eyes and ears open. But with obviously all the 6 or 7 variables that we spoke of, there is a lot of work to do. But sky is the limit in terms of resources being made available and the level of output that one can really aspire for. So both in terms of maximizing profit as well as wealth creation for the MSME founders family as well.
Wonderful. So thank you so much, Mr. Maheshwari, for giving such pearls of wisdom as well as motivation to entrepreneurs. And I'm definitely looking forward, and I'm also sure that the audience will be interested in hearing from you more and more. So we have to we have to just vary the time also, because we have limited time for this podcast, and definitely I would request for next session as well from your side. And we would like to know from you the next levels of how you can probably help MSMEs with your expertise, with your value added consulting and guidance and mentoring to the startups. We definitely would be interested, and for the audience interest, we would definitely like to know from this. And but thank you so much for giving time and giving such a great, insightful motivation for the SME Street audience. Thank you so much.
Thanks, Faiz. Happy to be of help, and I look forward to more interesting conversations on specific areas and how we can be of help in this entire journey that we envision along the other MSME founders in terms of helping them on the path to the 10x, 20x that all of us have been talking of. Thanks a lot.
Thank you.